Hello, Warriors. Powell speak today. Hi, Alexander, Bran. I don't know what he's going to say. Just don't believe it. Hi, Kman, Andrew, how are you? Paul, Richie, welcome to F.A.C.E. AJ, how are you? Marlon, welcome to F.A.C.E. Jamie, Anes Ahmed, welcome. And team, welcome.
Good morning, Dale. Good morning, everybody.
So the other day came in, good morning to you. You're talking about how the euro crosses were holding up well.
Yes,
still
sir.
so still the case. It's being kind of stubborn.
Absolutely.
About going lower. What do you think is behind it? Can
It's
I
your
guess?
other risk-off play. Usually when it's risk-on, risk-off, we see some moves in euro crosses, and typically against the weaker ones that trade risk, the euro crosses tend to go up a little bit. Have to look at euro commodity currencies, euro emerging markets, especially.
I see.
And that's what behind also has to do with bigger liquidity and a bit. And if we look at the differentials, the euro versus dollar differentials are those who are moving the least right now. So. Yeah, there was a bit of but it comes back regularly, a bit of talks about what ECB may or may not do with their asset purchase plans, a bit more QT perhaps, and there's various things that support the euro crosses right now, yeah, it's filtering through in the market. Could be the typical market move though.
You know, I saw a tweet that someone bought a ton of TLT calls that expire Friday, and the comment was YCC, yield curve control. You know, with the huge move we've had again, even this week in yields, bro, are you unimpressed with US dollar yen?
Wow.
Hanging out with it.
Speculation now. Are there some accounts on the offer, willing or not? Is there a big barrier again put in place just after the last time we went up above 150? It is a bit of speculation. Now, I am, of course, like everybody, is going to watch what Powell is going to say, and even more importantly, what he may not say, because the market is expecting comments on those yields, comments perhaps on Harker style, that the market is doing the Fed's work to cap the dollar a little bit. But if he doesn't give us anything, I reckon we fly through after a while in this dollar yen,
We're at 150. Do you have any numbers above 150?
151 for a starter. I've got some stuff around 150.95 and 150.110 or so, around there.
Okay.
Then, yeah, but I mean, I'm saying flying. It all depends on what he says, of course. But it does seem to tee up for a break, right? It's not giving back anything either.
Yeah,
which
true.
is logic, seeing the yields, of course.
And we're getting this advance, getting closer to challenging the highs here in US dollar won.
Yeah.
News behind it, or
no,
just flows?
Just more PBOC injections. The uncertainty surrounding, what is it, Country Garden or
real estate again.
Apparently not having paid some of their foreign bondholders, and it's just that the market is still not buying the Chinese revival. And I said it yesterday. I don't know if it wasn't Face on the Flow show. I said it's a bit bizarre that dollar China couldn't find offers for more than 15 minutes after those Chinese data. So the investors are really not buying it yet. And that's where we are. And it's I must say it's relatively quiet on the comments front, because we are now trading well above the 2% allowed CNY band, above the PBOC's fixing. So even though
Does-
CNH is free to move, but we know that they tend to send out their submarines if it goes above, and now we
Yeah.
are trading well above, and that and it's yeah, it's bit undeniably
Okay.
bit.
You know,
so
it's funny. I was actually just in the middle of typing a tweet, and I just tweeted it out, and I brought you up too, Kman, because you brought it to my attention this morning in the chat room, and yeah, this is a bit. I mean, if this breaks out, what is that telling you about, like? What's that telling you about the global economy just in general?
No, hmm. Yeah, okay. I mean, it could, but then I would be more looking at stuff like if you want to compare it, it's probably better to look at stuff like which has been
Aussie.
relatively okay lately, which are stuff like the Aussie, Kiwi, Canada, makes those kind of things. If they fall out of bed, then there's probably something really wrong. CNH is a tough one to really judge the global economy. We would have been trading around 7 and things. Yeah, I would have said so. Now around here, those recent highs. Yeah, it's of course it has to do with the global economy because China is such a big player. But I wouldn't say that China is your choice of. Is your instrument of choice to really express if you really feel the global economy is going down under.
And maybe just the Chinese economy then, which
Yeah,
right?
I think it's clearly the refusal of the investor to believe that China is out of the woods.
Yeah. Okay. All right. Fair enough. Sorry, Dale. I just want to jump in because I was literally, when you guys started talking about the CNH, I brought it up as one of my charts of the day, or just a YouTube short or something from a couple of days ago, and I was just following up on it based on our comments in the chat room when you guys started talking about it. So I wanted to just expand on that conversation a little bit. And good morning, by the way, Dale.
Good morning.
Happy Thursday. All right, I'll let you continue on.
No, it's all right. I'm almost done. Yesterday, talking about silver due for a pullback was a pretty good call yesterday. So,
you know what?
we'll
You jumped on that compliment before I could compliment you on that. So yeah, it was a really great call on talking about taking profits. It was the 618 retracement and the 200 DMA. Nailed it, Dale.
Yeah.
So, and for those who have a position, I can say that I took some off around there, 23.20.
Nice.
Look at that. You saved Kman some money.
I'm always glad to save someone money. Happier to even help them make money. So platinum is really not confirming what's happening in the metals, and you could almost say silver isn't really confirming what's happening in the gold. So I know a lot of people are going crazy over gold, and it's been no reason to step in front of it like silver. So I expect gold to continue to outperform. Here's your gold silver ratio, little normal pullback. Looks like it's flagging, going higher. That means, if you want to play the short side for pullbacks in metals, silver's the one.
And Dale, just for clarity for people that maybe don't have as much experience in trading metals in this environment, gold tends to outperform silver in kind of a when markets are stressed,
prices,
if you will, right?
Yeah, more of a monetary than in industrial. So that's the difference. Gold, it's like gold is about destruction and copper is about construction. So
that's a great point. But Arna says silver lately has been front runner versus gold.
Well, I don't know. I look at here's the gold silver ratio.
I was going to say
for a week.
Yeah.
But from back, you go back to August, and this means gold's outperforming silver. In fact, you look at a weekly after that this was a pretty huge week right here when we turn. It still looks good. Almost looks like we have a breakout. So we'll see what happens up here. Could we challenge this? We'll see. And I really think S&Ps have to get going today, or I might think about doing some covering. So I think we have to start to accelerate in the S&Ps here and start taking care of business. Yesterday, it looked like were we going to take out 4,200 by Friday or early next week, but we're getting a little bit of a wick here down here. And you look at all the damage you've had. I would have thought the market would have done a lot worse with one of their darlings absolutely getting massacred this week. Okay, I remember making the call that we have a right shoulder up here. It was just a forecast, but sure looking more and more like the forecast is manifesting. So we don't have a breakdown yet, and of course Nvidia could pop, but it doesn't look good. I mean, Goldman Sachs, the banks still do not look great. Here's the regionals, you know, just flagging. Looks like it's lower. So I think we have to get going here.
Yeah.
I don't know. We'll see who wants to go home long over the weekend.
I don't
With the
know.
war.
I mean, who would want to do that? I mean, you think about like the risks that are associated with, well, first of all, I guess the question would be, you know, did things get, do you think that things might heat up between now and the weekend? I mean, it is Thursday.
Maybe they'll go in, you know, begin the, you know, ground assault. So they haven't started that yet.
Yeah.
So,
yeah.
right. You know, I don't know what they're waiting for. You know, what's already happening, what's giving them pause is, so you saw what happened with that hospital. So right away, the whole world is blaming them, even though there's evidence it wasn't them. So they're going to have the worst public relations problem globally. I hope they don't end up standing out there alone. We'll see how long we stand behind them with all the news coverage of all the innocent people in the Gaza enduring what they have to.
Yeah.
So anyway, that's you know, the geo stuff for now. I thought it was interesting that Putin made a trip to see Xi yesterday. You know, was you know,
you know,
I don't think it was planned.
I don't know. I don't know what's
Yeah.
planned, what's not planned. I don't
Yeah.
follow everybody's like calendars well enough, but
Yeah, I have his travel schedule.
Yeah, I was gonna say, like, how do you do that? But I was talking to I had to do the weekly trade-off show with Chris Weston, which I really, you know, enjoyed doing every week, and I did it last night. But I was, you know, we were just kind of having a discussion about you know, in these types of situations, you kind of see where, you know, where your allies are, right?
Yeah.
And where, and you're kind of seeing where, what side everybody's falling on. And it's not, you have to pay attention, because when things escalate, or if I say not when, if things continue to escalate, people will continue to line up on whatever side they are on.
Yeah.
And this is a, you know, this is kind of critical if you if things do, you know, continue, we do continue down this road of violence in the Middle East. I think you have to pay really close attention to where all the alliances are at. And so I don't know. And I got a question saying, would you see an invasion as risk on or risk off for the stock market? I you know, that's a good question. I want to defer.
It used to be risk. It used to be risk on. We'd be going risk off, and then upon the beginning of hostilities, it'd be risk on.
Right, but then you got to ask, like, who's involved.
We haven't sold off though, like we should have. Like you know, that formula, we didn't really sell off,
right?
Like we did in, you know, Desert Storm or 9/11 or going into Afghanistan. It's almost like a different pattern, almost the opposite pattern. But you know what? You don't even really have to have an opinion about anything. But you start getting closes in VIX over 21, I wouldn't be long risk. Okay, because just this measures from 12.5 to 21. And if I get rid of that, you know, it's a big level. I could
Yeah.
even move this huge level, right? So
you know, it's funny,
there you go.
Dale, I'll take over the charts
Okay.
just because I'll show you something that's kind of funny. You know, this was, you know, on the week ahead video, because I use the VIX, you know, for analysis purposes, obviously. But
Yeah.
if you saw like the key, the head chart of my video, it's you know, this is exactly what you're just pointing out.
Yeah.
Is the VIX. It's just big resistance, right? And I actually even have an alarm. You can see the alarm set up at a move above 21, but it looks like it's not backing away, right? Like price action would suggest that we're going to break higher.
That's the way it feels.
Yeah, I
And
mean,
looks, yeah.
yeah, when it looks, because it's nudged up against that resistance, right?
Yeah.
So, you know, we have first of all, we have like we have unemployment claims today. You know, we obviously have Powell speaking in a little bit. And Kman, we were having this conversation in the chat room.
Yeah, in the cheerleaders room.
The cheerleaders room. That's right. And we were sitting here, and you guys can see we were having this nice little conversation about Powell. And right here, there's Ryan, you know, threw in his 2 cents. Ryan had to leave for the afternoon, so he is gone. He's out celebrating with his wife.
Good for him.
A couple decades of bliss. And there's my comments, and then Kman's comments right here regarding Powell. Let's have this conversation about here, because it's so important. It's you know, I want to say it's the marquee event today. We've heard, and let's talk about this, Kay. So we've heard from so many Fed governors over the course of the last you know, a week and a half. I think that the number is 8, and correct me if I'm wrong. I think it's 8 different Fed governors. We've heard them all run around the circus talking about, hey, you know, financial conditions are tightening. The Fed, or excuse me, the market is doing the Fed's dirty work. You know, yields are up at 5% on the 10-year, or getting damn close. So there's no need for the Fed to raise rates any longer. And that's kind of like the chorus that we've been hearing from these regional Fed governors. What are your thoughts here, and what do you think Powell's going to do?
Yeah. Okay. So what I was saying is that this Powell is likely. There's 2 possibilities, right? So either he continues to walk his fine line, high wire, cover all the bases as he's been doing of late, when he went away from his ultra hawkish stance to a more let's say more tilted towards the neutral. So there's that. If he stays mum about anything that has to do with financial conditions, debt, or even where yields are right now, then I think the dollar will probably rocket, because then we are going back to trading those high yields. 10s are probably going to break 5%. The next level is around 530. Okay, that's the pre-G7 high. If you go back to 2007, that's your next.
That's crazy, right? Pre-GFC highs.
It's kind of crazy. Yeah, so that is it. And then and I said a couple of times as well, but the other one to really watch. So everybody's looking at the 10-year, obviously. But watch the 30-year as well, because that is again above 5%, and it doesn't seem to be wanting to give much back compared to what we saw last times. So we're stubbornly hanging here. So knowing that we have like increased treasury issuances, there's just too much supply to absorb everything. So that's the thing. So if he doesn't say much, I guess we are going to break. And then since there's quite a few dollar pairs on very important levels, those levels are likely going to break, because I don't think that looking ahead then to what Biden is going to say tonight, that he's going to say anything different than what he already said. before, so giving his support to Israel. It's not a political comment, by the way. It's just saying like facts that could impact the markets. Okay, so then I think the dollar will continue to push on. Now, there is this thing, this hopium, or I should say that he will say something Harker style, and then he said,
of
like,
course, like throw the market a line, right? Like
say something
throw him
like
a little lifeguard, be a lifeguard here.
Yeah, so say something about the market is doing the job. We and signaling basically that even if the yields go higher, it doesn't necessarily mean that they are going to continue to hike. They don't respond to market moves on yields. They respond to other factors, right? Inflation and employment and things. So he could say like, okay, this is not because the yields are going higher that we continue to hike. So this may be the kind of thing. Now, where the dollar could really, and I'm not saying like turn around, but get a bit of a kick in the teeth is if he goes outside of his mandate and start to talk about the debt influencing the yields, too much issuances that they may need to step in at some time, then really the dollar would get a kick in the teeth. But is he going to do it? It's not really my base case. So I think he may talk a bit Harker style, but he's not going to give the market as much as saying like, hey, we have gone far enough, you know.
Yeah, well, I mean, let's first of all, and I want to talk about that. Why would he do that to himself when you've got inflation is still high on at every measure, right? You have the risks of higher inflation with a
war.
With the war, excuse me, it's just kind of an increase in risk that intensifies. Then you have a labor market. I mean, we're going to get the unemployment claims, but we got a labor market that's freaking out of control, strong. I mean, I would say out of control, but it's just it's strong, and and because we have this labor market that won't back away. It's fighting what the Fed's doing here. So I would think it'd be silly for the Fed to shoot himself, or the Fed chair to shoot himself in the foot right now and say something like that. But I think it's important, and this is all orchestrated. I hope everybody understands this, and I think Kman I would agree. This is orchestrated amongst the Fed governors. They talk obviously about what's happening, and they will he'll march certain people out, saying certain messages. I think, as they're trying to, communicate, how they feel, but that doesn't mean that they're all going to do it at once either.
Yeah,
but kind of got to ease the market into things.
Yeah. I don't think that he tried to, how shall I say, muzzle people also, because otherwise Harker wouldn't have had the possibility to repeat for more than a week and a half what he's been saying. So perhaps there is some consensus that Powell may start to move the needle again a little bit more, like going perhaps completely neutral or even tilting slowly towards the more dovish side. But yeah, it's still not my base case. And let's not forget, like, was it a year and a half, 2 years ago, he said like some pain may need to be taken. And if you look at the labor market, there is no pain yet that's taken. If you look at the S&P, like just take the S&P year to date, up 12%.
I know. Like, I mean, what kind of pain is there?
Where's the pain? I know the housing market is showing signs, right? I know that. And everybody knows
that's ridiculous, because house prices are still, like, you look over the last 3 years, they're doubled.
But I mean, everybody's talking about the pain on the renewals of the mortgage deals and stuff like that. But and we get it. But look at all the rest. There is no pain yet that has been taken. I mean,
who would have thought? Who would have thought, after all these at the pace and the magnitude of interest rate increases, if you'd asked me, and that the markets would be positioned where they are right now. Great
Anyone
point.
play. Anyone
Yeah.
play. The
Yeah.
key was for a long time in the liquidity, because they've injected so much liquidity. It never been seen during the pandemic. It's never been seen so much liquidity everywhere in the world, and that explains in parts why we are still here in the equity markets. But now QT is running in the background as well, and really, I think the next move, and I'm going to repeat that probably into year end, but the next move in yields, if it comes due to, let's say, worse factors than really great economic data, that's where really your I think the equity markets are going to be impacted. I'm not saying it will, because if you look at the jobs market and other markets, it's still not there. But the next leg higher in yields, if it and due to debt, due to US treasuries and stuff, if it doesn't go paired with good economic indicators, then I think that's where your next leg will come from in equities lower. But it still needs to be seen, right?
Yeah. Hey, Anthony keeps, mentioning about the euro and why is the dollar getting kicked in the teeth right now. And I personally, I think there's just some positioning ahead of what's to come today. But I want you to read this to you from, this is what, a couple or maybe an hour ago that I wrote this to Kman. We were having this conversation, Anthony, and this is in the ForexAnalytix chat room, but you can read it here. I agree, Kman, the Powell speech will be so important today, and it will be after the fix. So what I'm hoping for is that we get some strong US dollar moves, like let's say the euro dollar another 30 pips higher towards resistance, which, by the way, we're getting there, Anthony. We're almost there. Towards resistance around 106 is what I'm looking for. And I will start buying some US dollars ahead of him speaking. Personally, I don't think he's going to give the market too much of what the other regional Fed governors have been saying recently. And he has to make sure the market knows inflation is still too hot and the economy is too In other words, I think the risk is for US dollar buying post Powell. So guys, I'm telling you, I'm showing you that just because we're having this conversation right now. And Anthony, if you're not understanding that concept of, of kind of what we're discussing here, and you should probably be, in the ForexAnalytix chat room having these discussions with us. It'll probably help you out. But look at this channel resistance coming into view. This is big, right? Kman, I mean, this is the level that
short term it is.
Short term. I mean, this could put us back at 107 if we break. So
yeah, although I'd still argue that 106.35.50 is going to be a big level. Because of when a trend line goes down in that way, it looks like we could also go down, go outside of it more horizontally, right? But this is just what I think.
Yeah, right. It's that level right there that you're talking about.
Yeah, and the question about the euro is we spoke about it on right at the beginning of the show. I think it's more to do with euro process than euro dollar really.
Yeah.
The differentials between euro and the US are also not widening dramatically, and that's also a reason why the euro is not going as fast versus the dollar than other currencies.
Yeah, we were just discussing this also in the chat room. The euro Aussie's right up against resistance. So you're seeing the euro like kind of do some dirty work against some of these. Look at the euro sterling, Aussie, Kiwi, Swiss, Canadian peso. You can see all of them.
Yeah.
Right.
Yeah.
Exactly. Oh shit. Sorry guys, I didn't mean to say that either. We have 1 minute till the data comes out. My bad. Sorry. I just looked down at the clock and said, oh, we need to get ready. Okay, so we have the S&P right here. Yields, as you know, we're getting so close to 5%. I cannot believe that actually as I'm saying it. Right here is, I'm going to make this the US dollar, and we're going to put it on a 15-minute chart. We're going to get instant reaction about the weekly unemployment claims. I saw a chart this week, or last week rather, I forget what group it was, that showed every recession, where we're at, and why did that? Oh crap! I did not want that to happen. Sorry guys.
10 seconds.
Yeah, I'm gonna try to get that going, but we'll have to See, okay. Anyway, here it is. Data flash is pulling up. Anyway, it shows that weekly unemployment claims could start weakening anytime, but not this week because you can see the dollar
below
is
200, the jobless.
Wow. How is Powell supposed to, do?
Exactly.
I mean, this is a trick for him, right?
Weak Philly Fed.
Yep.
Weaker Philly Fed.
Came in at 9, yeah. Continuing claims a little weaker than expected. But I mean, here you go. You got initial jobless claims that won't tick higher. Just shows you how tight this labor market is. It's a tough job that the Fed chair Powell has, right? I mean, it really is. So I don't know. So hey, Dale, what a fun show. Kman, what a fun show. You notice Ryan's not here today. Let's not make that a theme with him, because we're having way too much fun. And I hope you guys and gals are having a great time here as well. And I hope you're picking up some cues in the market.
That's really an important point you just brought up. And I thought about it because a trader friend of mine said to me, you have to be happy. He has never seen a successful angry trader.
Right?
How about it? I mean, you have to have the right attitude. And you can't be angry and be a good trader.
Why?
That's really all about life too. But no, when you're trading the markets, it's stressful. That's like does your actual physical heart inside of your chest, do you really need that to just have a poor attitude about the markets and trading and be pissed off all the time? I mean, money, you're going to make it and lose it, but and it's part of the game when you trade.
They'll revenge trade. They'll blame. I got burned in the end, like it was the yen's fault. You know what I mean? Anyway, so everyone just be happy. Don't worry. It's only money.
I heard that in a song somewhere.
Yeah, I'm going to write it over the weekend and get sued for plagiarism.
Thank you, Dave. Thanks.
Yeah, thank you, Kman, for being here, and thank you, Coach, for guiding us. I know you have your interview coming up, and thanks everybody for listening in every day. We'll see you tomorrow. Hey, tomorrow, don't forget, we are bringing on a new ForexAnalytix team member tomorrow. That person will be joining us after literally 24 hours from this moment. So make sure you guys are tuned in tomorrow. So, all right. Thanks, Dale. Thanks, Kay.
Thank you, Kman. Thank you, Blake.
Thank you.
See you guys tomorrow. Hi, Kim. Welcome back. Welcome back to F.A.C.E. Mama Investor.
Hello.
How are you, Kim?
I'm good. Trying to get my video started.
Oh, we have a little audio. Sounds like you have a frog in your throat.
Oh, really?
Now better.
Is that better? Because I can take it off my headphones.
No, that's good. That's good.
Okay. It won't let me start my video on my end.
Oh,
It says unable to start.
do you
want me to try to make an adjustment here, Dale?
Yeah.
Let me see. It says you're already a panelist.
When I try to start it, it says I can't start my video because the host has stopped it.
Oh, here, let me start the video and then I'll stop it. There you go, and see if you can do it now.
No.
Still no, huh?
Yeah, it says unable to start because the host has stopped it.
That Dale,
Steve is the host now, so he's gonna fix it. Maybe it should always stay open for the guests. So, share a screen, etc.
Yeah, I was gonna say, for now, maybe you can pull up your charts and we'll see if he makes that adjustment.
All right, Kim, and I'll go off camera, so we'll be kind of talking heads without the heads.
I got ready this morning too at 4. I was up at 4 a.m. because I'm on the west coast.
Yeah, that's when I get up too, and but I shaved the night before.
I got up in the shower.
Yeah, I wish we could. I'm sure Steve's working on it. In the
No
meantime,
problem.
Dale, it should work now.
try it now, Kim.
Yep, there we go.
Oh God, it was worth all the time you put into it. I really, really appreciate it. You look like,
Oh, she's much
glamour.
better. She's much easier on the eyes than you are, Dale, for crying out loud.
Well, I hope so, Blake. I'd have to leave the company if you answered differently. So anyway, great to have you back, Kim.
You know,
How are
I'm
things been
looking
going?
forward to it. I can't believe it's been 3 months and we went through the summer and now we're in
Yeah.
Q4 and, you know, market's back. The summer
Trees
was,
are turning. I went down your stream and, I see, you have that appreciation for beauty and nature is beauty. So let's talk about some ugly things like trading.
yes.
Okay, so there's a lot in the background going on geopolitically. Powell's going to speak today. We've had this pullback from 4,600 to 42. We're kind of mid-range of that. Where's your head at? What's your take on what's going on here? How are you positioning yourself in this
I
market?
mean, I do delta hedging essentially in my portfolio, meaning that, you know, I'm always long stocks as we talked about last time I was on. And at the
Right.
same time, then I can put short futures on or covered calls on or use different strategies to kind of bring my deltas down so I'm not as exposed if the market's going down. So this is probably the lowest delta in my portfolio I've had in a long time. I'm not net short, I'm still net long. But I feel like with the yields are trading
Yeah.
like meme stocks. I mean, this is
Yeah.
like GameStop or something, you know, and I can't imagine that someone who's trying to short it or thinks that yields have, you know,
Peaked.
gone as high as they could, that they're not going to get at some point, you know, margin called or, and
Yeah.
then, you know, bonds. I was reading that this is the widest gap in I don't know how many years, like 30 or 40 years ever between equities and bonds. I actually took a position long TLT recently, thinking
Interesting.
at some point I'm not going to catch the bottom, but
Yeah.
I'm sure when bonds catch a bid, there's going to be a huge snapback. So it was just a small position I took just to basically see where we're moving. But at some point, those jaws have to close.
Yeah.
You know,
I mean, the mean reversion is it's called disintermediation. Do you remember 87?
I
Were
was
you in nursery school then or something?
no, not exactly nursery school.
Okay.
You know?
But we had yields rising sharply,
Mhm.
although at that time the dollar was falling and the market kept going up and resisting the move in rates. Does that sound familiar?
Yeah, that sounds like today.
Yeah, except
Except the dollar's going up.
yeah, yeah, and a lot of people think peaking or getting close to a peak. So the TLT is definitely a contrarian position. So knowing that you hedge a lot of things you do, did you buy TLT and sell calls against it or
Yeah,
buy
I did
puts for protection?
Yeah, so I didn't buy puts, like I didn't do the hedge wrapper that we talked about last time.
Okay.
But I did sell covered calls at the 87 strike on it. I was a little like 2 weeks ago, it kind of moved up. So my calls were underwater and now they're obviously coming back to me. So I was like, oh, maybe that was not the best move. But I mean, that's the nice
Good.
thing that I can be selling covered calls against it. The premium's not bad. I don't know what I should look at right now what the IV is on it. The IV is really high. The IV rank is 71 compared to its historical volatility. And I think, you know, even like if you're a consumer like me or a retail investor, right? With rates going this high, just for someone like me, if I wanted to move, if I want to, you know, do home improvements and refinance my home,
Everything.
you're frozen or paralyzed.
Yeah.
And businesses that, you know, need to invest and, you know, raise capital, they're paralyzed. And so, it freezes, I think, a lot of the market to, make reinvestments or to home improvements. My first mortgage though was 7.5%.
Yeah. So it's recency bias, what we're used to, and the adjustment of getting used to this. I found interesting in your stream, you caught that gold and silver pop that we had last week, and the vehicle of choice for you, and you say you love them, are micro lots. And I think people don't take advantage of micro lots as much as they should, because they figure, oh, that's just for, shortstops and little guys, and, how can I make money in a micro lot? Why don't you explain why you say it's one of your favorite instruments to use, micro lots?
Well, the reason why I like micro lots, people that day trade and are scalping 10 points here and there on the, NQ, that might be a great strategy for them. They can put 5 NQs on and they're just looking to get 10 points. I'm looking to swing trade. I'm looking to take a position and going short NQ, which I am right now. And so if the trade goes against me, I can scale into that trade.
Got it.
So, and also, I explained before that my husband was a former futures trader on the S&P. And one morning I woke up to many short NQs on a given account, and I like to sleep at night. And so, it's just like, it's peace of mind. It's more strategy versus that I'm looking to gain, make this, 2,000 gain on something. It's the small gains that add up. And I look at it often as just hedging or going contrarian. So when, unfortunately, the war started between Israel and Palestine, I bought the metals right away, thinking that would be a safe haven, and that oftentimes commodities go up. And so I used the gold and silver futures, and I started with the micros, and then I just started adding. Or if you see something break out, you can add.
What I find interesting is the 2020 version of the woman looking after the house, which I'm not being a misogynist, but you apply a different definition to housekeeping by waking up and seeing your husband short too many NQs. That 10, all right. So that's a new
scale them in.
That's modern day, taking care of your husband.
The thing is, like, different people have different risk tolerances, right?
Yeah.
Actually, he was right.
Yeah.
And it took a day or two. He's usually early, and his assessment was right. When you're a floor trader, you've traded a long time, you get a feel for the market. It's like a living, breathing organism, essentially. And so you start to feel these gyrations in the market, and he's really good at kind of seeing things starting to top out or starting to bottom out. It's not that he's going to top ticket. I'm fairly, I'm pattern oriented, so I can tend to see patterns. I used to teach statistics, so I see how things. I still teach, but I don't like teaching statistics because students don't like it.
There's a song by Van Morrison that I want you to play today called "Why Do I Always Have to Explain?" And I dedicate that to all teachers, mentors, everybody. I wanted to ask you about your view on the patterns that we have working, and could this week's sell-off in the AI darling NVIDIA be a bad sign for the market? Because so far the market's been kind of absorbing that. It looks like a head and shoulders stop to me. I identified it up there at the right shoulder. Is that a bearish looking chart to you? Do you follow NVIDIA?
Yeah, I do follow NVIDIA. Mark was, when it was $100 or 110, he's like, buy NVIDIA now. And
Yeah,
we only bought a
okay.
small position. That's when everything was kind of, crashing.
June.
No, a year.
Oh,
Last year.
okay. Okay.
Last like October.
Okay.
We have a lot of friends in the tech because we're in Seattle. And so we have a lot of friends over at the different tech companies, and we were hearing rumblings, or he was hearing rumblings about this chat GPT. And so NVIDIA being,
Okay.
with
Yeah.
their chips. But yeah, I think, the thing is when these crazes happen, like in the .com bubble, because I do remember the .com bubble, when these crazes happen, these stocks just go parabolic. So I think for me, when you see a chart going straight like this,
Yeah.
I mean, there's nothing, I don't even know that I need to look at ahead and, Mark would be looking at his head and shoulders. I would be going, that doesn't look like it's okay.
Yeah.
I mean, you see something rise 400%, and not that their sales haven't been great, not that they don't have future sales, but the market can only withstand that for so long in most cases. And then Tesla, I mean, that'll be interesting to see whether the market absorbs, Elon Musk. I didn't listen to the call, but I've been reading about it, speaking about how high interest rates are hurting the business, and he
Okay.
needs to continue lowering car prices and the Cybertruck. He didn't delay it, but from what I read, it's just that, maybe it's not
Yeah.
going to be selling as many because they can't produce them as quickly or something.
Yeah, Tesla doesn't look like it was participating on up days anyway. It has 2 lower highs in there, and it's a cult stock. And I was thinking maybe 210. And remember last time you were on, I was underwater in Apple.
Yes,
That's no longer the case. Do you like
nice
or
job.
own any of the Magnificent Seven?
All of them except for Facebook. I will not buy
Okay.
Facebook.
Okay.
I bought that. We bought that pre-IPO and then sold it years ago. I own, I'm looking up at my screen right now. I own Google, Apple, Microsoft, Amazon. What's the other Magnificent Seven? Netflix?
Yeah, I think and they had good numbers. They're going to be
Yeah,
up
they
today.
did. Yeah,
Yeah.
They're up like, what, 13 or 14%.
Yeah.
But,
So
I
you guys
was
are good holders too. I mean, that's a very unusual combination that people that are traders have a difficult time being holders of assets because they won't, they'll see something on the chart. Well, I could take it here because I know it's going to get cheaper. I'll recommit, and then you turn your head and you've gotten out, and then it goes without you. So how are you guys able to maintain those two different mentalities? You have different accounts so that this is your long-term account, this is your swing trade account. Do you do it that way, Kim?
Yeah, we do have different accounts, but in the one of the accounts that I only trade one account.
Okay.
But that's where I do have a bulk of Apple, Google, Microsoft, because I like to sell covered calls against it, or
Okay.
possibly do hedge wrappers, where you're selling a call, buying a put, what I discussed last time. And so right now, selling covered calls has been like the money trade, and it's a conservative strategy, obviously. Have I ever turned over my stock? Yes. And then I sell a put against it. Usually what I do, though, is I try to keep rolling that covered call for a credit.
Okay.
And so I roll it forward to I do these like every 30 days to 45 days. And then if they start going underwater, I'll roll them out and I roll them for a credit. So it's not that often that I turn over my stock because it usually mean reverts, right? Unless we get in a parabolic move like we did with Amazon bouncing off the bottom. I kind of thought like once we bounced from 85 up to 110, I was like, that's a big move. I'm going to start selling covered calls. And I did turn some of I could have rolled it out, but I was like, forget it. And I just couldn't get a good enough credit, so I just sold puts against it. Sold
Okay.
sold cash secured puts. I'm sorry.
Yeah, so you're very well versed in options trading and strategies and against stocks and just using them for outright kind of positions. I believe you give a lot of credit to some gentleman who is with Tasty Trade that's helped you move
Yes.
along and
Yes.
help you grow and see things in the options market that you may not have found out on your own. I think it's
Yes.
great that you give others credit for your growth.
Thank you. I mean, I love to find genuine, real, honest people. And the Tasty Trade group is, they were former floor traders.
Yeah.
They're not charging exorbitant fees, and you can learn their tools for free. I also like black box stocks for options flow. And then I also use bar chart. Bar chart has great options information, and those are people that I've come to know that I trust, right? Because there's a lot of people in this business that I don't know if they're in the business, but they're trading and doing zero DTs. And I'm not saying like ever doing a zero DTE is a bad thing. It's just that's not my style. I like to be able to think about what I'm doing and be able to assess it. And if we're doing zero DTEs, I would just be panicking out of it because that's just my, in the moment. That's why I like swing trading the micro futures also. Sometimes I shorted RTY 2 weeks ago, the micros, and I was looking for 50 points. So I was looking for it to come back down to the low 1700s. That came back to me in a day. So I wasn't expecting a 50-point move. I think it was last week, it came down 50 points. So I wasn't looking for that 50-point move in a day. And when it came back to me, when it came, it was basically a day trade.
Yeah. You weren't planning it, but you still got your target. So the target is more important than how long it takes to achieve it.
Yes.
Of course, right?
I've rolled my futures for quite a few quarters before.
What's wrong with immediate gratification, Kim? Once in a while. Why do we don't have to sweat everything out? It's nice when it happens like that.
And also, I think you have to be, if you're going to swing trade, you have to be able to hold those trades overnight, right? Yeah. Can you still hear me okay?
Yeah, you're good.
Okay. You have to be able to hold those trades overnight because, the futures are cash coming out of your account.
Right.
If it's underwater, right?
Yeah.
Sometimes what I'll do is if I'm underwater on a long or on a short, for example, then I'll go long another future, like temporarily to offset it. So and you can buy futures options as well. So I'm not saying this is a good strategy, but I have what I call black swan puts on the ES.
Oh yeah? And what are they? What are black swan puts, if for example, in the ES?
So I'll go 60 days out. And I just count it as the cost of doing business, right? I'm not paying
like insurance. Yeah, insurance.
Exactly. And I'll buy right now, I have ES 3,400, December 29th. So I go
this December 23 or 24. Yeah.
No, this December. The cost for me was $1,200 are actually up right now.
Okay.
All right. And I'm not looking for it to get there, but if we had a big move down, there's some protection. I'm not going crazy buying a ton of them. I'm just buying a few. If there's some big down move, right? Because there's just a lot of things in the market right now. I'm not calling for a crash. I don't even know if our system, with all the trigger stops, if the market fell 7%, I don't even know if we could have a 25% down day anymore.
I don't either.
But the thing is, if vol increases, options futures don't have theta decay. So if the vol increases exorbitantly, those can become worth you know, not your max profit. That's not what I would be looking for, but definitely as something that brings down my delta and as another means by which to hedge.
Yeah, I
And
think
I
it's
just
very
add those
smart.
and forget it.
Yeah, because most people would say what you're doing is just a waste of money when what
Yeah.
it gives you is peace of mind. I will
Yeah.
pay for peace of mind. People do it. They put security systems on their home. They might have a
Mhm.
floor safe. What's wrong with you know, looking at being hedged for the outlier? Because they happen sometimes.
I did that when the Ukraine-Russia war. I don't like to, you know, say I'm
Yeah.
making money off of something, but I had actually had them on before that, and then I added a couple more, and those ended up, you know, I
Yeah.
think quadrupling at that point, right? And so I pulled several off. And took the profit. So they have paid. And hey, if you're paying 1% of your portfolio for a money manager or
Yeah.
whatever it is,
Great point.
to count that as my percentage a year. So I keep that in my head. Like, what percentage would I be paying a money manager if I'm managing it myself? Then I can afford essentially to have those. I have some put spreads on right now, also on SPY. So last week when SPY went down, I'd only bought, I just had a few, and then I rolled them, and I buy them near the money, so I don't go that far out of the
Yeah.
money, and I usually do about 60 to 90 days, and I know there's a lot of premium in those, but those have worked for me, and then I rolled them, and I added a long leg to them, so I took some profit, and at that time, I like,
You know what? You're not a trader, Kim. You're a dancer. Your style of trading is like a dance where you roll from position and spin around and all kinds of graceful moves on the dance floor. That's what I started thinking of when I just heard you talking about what you do. It's your trading is like a dance, Kim, and really go ahead.
I posted a picture a while back on my Twitter because I have the Italian flag in my profile, and that's in honor of my Italian grandfather. And the picture I posted was of him, 85 years old, dancing on the dance floor, and him and I on our last dance before he died.
Oh, wow.
So
But
I posted
anyway, has anyone ever described it to you that way, that your style of trading is like a dance? Because you know
no, but
how.
to dance.
All right. Kim, it was, I'm so glad
Creative.
that,
I like being creative, like, you
yeah,
know,
yeah, yeah.
I get
And
so I like doing different things and seeing how different things work. I'm always conservative, you know, like I'm not adding 50 spy
yeah,
puts on. Though during COVID I did. I
yeah,
will say I had puts on everything during COVID. Everything. And I mean, that paid off.
yeah. Well, I enjoyed our conversation today. I think that
Thank you so much for having me.
people can learn from you, Kim, and follow you on Twitter at Mama Investor. Anywhere else they could go to keep an eye on, you know, whether you're doing, you know, the jitterbug or the funky chicken, huh?
The only social media that I keep on is Twitter.
Okay,
I'm like too busy to keep up. I used to have Facebook. I don't
yeah.
forget.
Well,
And I love the Twitter community. I love the trading community on Twitter. It's just like, it feels like a sense of belongingness. And it's one of my favorite, you know, my connection in the day to the trading community.
all right. Well, I'm so glad that our paths crossed, Kim, and wish you and your you're the better half, your husband, a great fall trading season. And let's get back together in the winter and see you know, what kind of moves you're making then.
Okay, thank you so much. Thank you so much for having me.
Enjoyed
It's
it,
been
Kim.
a pleasure.
I
Thank
really
you.
enjoyed it. Everyone, follow
Thank you.
Kim. Yes, at Mama Investor. And Have a great weekend. Thank you, Kim.
Thank you. Bye.
Bye-bye. So that's a wrap, everyone. I hope you enjoyed Kim. I enjoyed her. And you could join the team in 15 minutes on the Morning Edge. And adios. I'll see you guys wrap it up tomorrow. TGIF tomorrow. Is it? Please tell me it's Friday tomorrow. Anyone do that? I can make it. I can do it. All right. Thanks, Barry. See you guys and ladies. All right. Thank you, guys. Don't just count your